John, Gruss, we're going to go to you with story number one. I'm going to read you the headline or read you the first couple graphs, and I want you to provide some insight. So here we go. The publication is the Commercial Observer, and the headline, John, is Miami's real estate boom could continue to echo. First couple graphs, John, and then I'll ask you to comment. Here we go. This is interesting. They start with a quote, but we'll go with it anyways. Quote, why did we come down? Christopher Schlenk, founder, co-chairman, and president of Manhattan-based Savannah, pondered Wednesday at the Commercial Observer South Florida Development and Capital Leadership Forum held at the Bath Club in Miami Beach because everyone was moving down. Story goes on to say earlier this year, Savannah launched a luxury condo project in West Palm Beach, marking its first development outside of New York. Even as COVID-19 health crisis fades and interest rates are at their highest levels in 22 years, South Florida is still riding high from its pandemic-fueled bull market. Speakers on various panels and in one-on-one conversations concluded demand for both foreign and domestic buyers remains strong, according to some of the region's biggest developers in attendance, including the related groups JP Perez, Terra's David Martin, Royal Palm Company's Daniel Hadzi. And then finally, the added demand is aided, elevate neglected neighborhoods. A guy called J. Philip Parker, who's a commercial broker over at Douglas Elliman, he's got a quote that says, I remember 20 years ago having people come to me and say, there's only one place I want to live, and that's Miami Beach. Today, there were so many more neighborhoods where people want a home, Jay Parker said, referring to downtown Miami and other parts of South Florida. John, what do you make of the fact that everybody is rosy and everybody is on the south side of
in the story? These kinds of conferences and forums are, just basically rah-rah events. And this is sort of a rah-rah story, and it reflects that. I kind of read these stories like I would Chinese communist propaganda. You have to sort of read between the lines. You have to sort of intuit a little bit about what's going on. And deeper into the story, there was a little nugget about the issues that they're having with bank financing. And I think that's really critical because now the regional banks are basically on the sidelines. The regulators are all over them right now for commercial real estate lending and basically splurging on commercial real estate loans. And basically the regional banks are on the sidelines. And it was really interesting to note that deep in the story, there was mention of issues with financing. And, I think that's going to be a major issue in terms of, keeping the momentum going. I think that, without cheap financing, a lot of projects are just not going to happen. And I think they alluded to that, but you kind of have to read it like you would, the propaganda. You have to sort of get a sense of, what's going on and the tone of it. So that's kind of what I got out of it.
And John, let me just provide some insight for maybe anybody who's listening to this or watching this podcast, talking about the lenders and the financing. So there's a guy called Asi Symbol. He's a developer, kind of made a name down here 15, 20 years ago. He bought a piece of dirt on the south bank of the New River in downtown Fort Lauderdale. The name of his company is Symbol DLT Companies. He also has some property in and around the Wynwood, Midtown area of Miami. So here's what's referred to from Hasi. It says, lenders are part of the problem sometimes. This is paraphrased. They require so much coverage to a point where, and this is a quote, it really doesn't make sense. John, if you got a developer saying that it's not making sense from a lender's perspective to go ahead and borrow money and go ahead and try to build, is that the telltale sign? Is that a canary in the coal mine?
No, that's exactly, what I was referring to is, hints
okay.
that, the lending environment has changed. And it certainly has. I mean, interest rates going up the way they have so dramatically. And now you have a lot of projects that, perhaps would have made sense with cheap financing and not so much now with the financing, if it's available, because I mean, now you may not even get financing. And lenders require all kinds of covenants, and they require all kinds of, equity now in deals that perhaps they may not have a few years ago.
Interesting. Brian, I'm just wondering, you write a lot about, and you're the real estate editor at Software Business Journal. You write a lot about real estate. You write a lot about finance. Do you have any thoughts about the rah-rah-rahness
Well, if you talk to them in private, they're not as optimistic because they know that it's very difficult to get the projects to move forward with financing, with the cost of construction, the cost of insurance. There are a lot of obstacles, especially the high-rise project. The high-rise project costs significantly more to build, and there's a much longer timeline to build them. So there's demand from people, but again, it's tough to make the numbers work. And and the question is, in order to make the numbers work, you have to have high price. And how many people are going to continue paying those prices? And so far, a lot of the projects are doing well, but again, you'll note that there's basically two types of projects: the ultra luxury project, and then the short-term rental project. Nothing really in between. So that's basically what we're getting. So how much more ultra luxury and short term rental can we do? I don't know. We'll see. Right now, they seem to be selling fairly well, but making the numbers work is a real challenge, and they have to keep raising the prices in order to make it work with all the huge costs of this development.
Brian, let me ask you a question. We've seen references, and we've made references on this podcast in the past about the number of rentals that are under construction in and around South Florida there in this particular cycle. 55,000 is a number that was thrown around. I don't want to catch you flat-footed, but anything you can tell us about the rental market, what's under construction, what's already been delivered, and what the sentiment has been like, either from a lender perspective and or a developer perspective?
Well, rents are softer than they were a year ago. Before, they were going up double digits a year. Now they're going up slightly. I was just speaking to a leasing broker who specializes in West Palm Beach last week, and he says that it's actually leasing has slowed down in the new buildings in West Palm Beach. He thinks maybe he's not sure if it's the season or maybe there was just so much that was delivered at once. But yeah, the issue is when you have that much delivered at once, and everyone needs high rates to justify the cost of construction, right? They can't really afford to discount all that much. So that creates a lot of pressure. And then you're facing competition from the condo market because a lot of these condo buyers, they want to list their units for rent too. So the question is, how much demand really is there? A lot of new buildings are reporting that they're leasing up and they're doing okay. But again, we're seeing a lot move forward. Now, at some point, the market might kind of regulate itself because the high construction costs might cause people to say, well, now's not time to break ground. So that might give more time for the renters to catch up. But I mean, if you look at the numbers, if you look at the population data, a lot of the studies, they still, even though there's been a lot of construction, there's still a lot of people trying to move here. There's a lot of people trying to move out, to leave their home and, get out from their parents, at these rents, though, is it possible? So I think they need to take a quick look and say, okay, how many people can pay like $2,800 a month, for that starter apartment here? That might be a little much. Maybe we should focus more on the suburbs to get a lower starting point for some of this stuff.